Good afternoon. My name is Albert Essien, and I work for the Ecobank Group. I have quite an interesting composition of the panel. I have two from the buy side, and I have two from the sell side. So I have, checking the list here. I have the governor for the Central Bank of Uganda on my immediate left, Emmanuel Tumusime Mutebele. I hope I got it right. Thank you very much. Then I have Bob Diamond, founder and director of Atlas Mara, the mover and shaker of Africa of late. He's the new kid on the block. Then I have Mr. Chris Newson. Mr. Chris Newson is the CEO of Standard Bank Group for Africa. Then finally, I have Dr. Michael Gondwe, the governor of the Central Bank of Zambia. So that's why I say we have two from the buy side and two from the sell side. The sell side being the regulators, and the buy side being the bankers, the commercial bankers in the room. We're going to talk about cross-border banking. Cross-border banking has been very topical, more so because of the bank that I work for, that is Ecobank. We are in 36 countries, operating in 34 commercially, and I guess we've been a handful for the regulators. On the positive side, it's also brought the regulators together. And the regulators these days, even the World Bank, they're thinking of how do we actually handle this new phenomena of cross-border banking. So without much ado, I would want to actually call on the panel of experts to start the conversation. And I would want to start from the buy side. So I would want to ask my friend Bob Diamond to lead the discussion, to tell us what he thinks about regulation, what he thinks about how to get things fast-tracked, how to bring very good practices on our continent, and again, how is he going to work with regulators, governments, to make sure that cross-border banking is handled properly and the downside risks is minimized. Of course, I also want to hear about lessons that he has actually learned since his foray into Africa. I think that we've heard the opening statements from all the four panelists, and it's time I would want to give our audience more time to also be part of the discussion. So without much ado, I would want to open the floor. I've seen a hand up, so I don't know who controls the mic. Okay, Precious. So you mention your name, where you come from, and then your question. You could direct to the panel in total, or you could be specific. I can also take questions.
My name is Khalid Al-Aboudi. I'm the CEO of ICD, which is the private sector arm of the Islamic Development Bank. So naturally, my question would be about Islamic banking in Africa. Actually, Islamic bank in Africa is at a very, very early stage. It's only about 1% of the total Islamic banking. So there is a huge potential for Islamic bank in Africa. There is two sides of this. First of all, there is the side of the liquidity on the Islamic banking. So by allowing more Islamic banking regulation in the continent, allowing, establishing more banks over there, that liquidity can be actually made available. Second issue is about the real sector economy connection of Islamic banking. The fact that it's a banking that works with the real sector and, productive side. So I would like, the question for the two governors over here about their views about this and how do they see, and if there isn't potential applicants for Islamic banks, their respective countries, whether this is something that they would, entertain. Just as another one small comments about the, another experience, which is the Moroccan bank's experience. Maybe this is a different question. Probably it would be nice in future session to see also how these the expansion of Moroccan banks, and of course they are conventional, not Islamic, but from other side because they are from within the continent. What are the lessons from this expansion, and what really they add to the economies of Africa? Of course, most of the expansion was in West Africa rather than South Africa. Thank you.
Thank you very much. Let's take one more question. Then I note that this goes to the governors, but if we could, okay, Ashley, we'll get back to you, please. Okay.
I promise you can have the next question. All right. My question, I'm Ashley Bendel from African Alliance in New York. My question is with regards to the consolidation of the banking sector across Africa. You talk about Basel I, Basel 1.5, capital requirements differing across every country. I'm interested in how you, some of you or all of you, see that unfolding over the next 5, 10, 15 years. Thank you.
Okay, good. Let's take the third one. Then.
Thank you very much. This is Harry Broadman from PricewaterhouseCoopers. I run the emerging markets business strategy consulting practice globally for the firm. I guess this question is directed to the supply side, if you will. Chris Newsom mentioned that standard helps, I'll put it in my words, facilitate information sharing among the central bank governors. I want to hear what the central bank governors from their side, what mechanisms are they using in order to facilitate, not necessarily congruency, because those are national policies, but what vehicles do they follow in order to share information more readily? Particularly the whole theme of this panel is about cross-border banking. I'd like to get a sense of that. Thank you.
Good, thank you. I think we have 3 or 4 questions on the floor. I think the issue with Moroccan banks will be noted. Perhaps for the organizers, for the next time, they could have something like that on, amongst others, to share it. But I would want to go to the governors specifically to speak to the issue of Islamic banking in Africa. Emmanuel, would you want to take that first?
Well, I don't think it's surprising, but we don't have much experience with Islamic banking. Although in Uganda we have just gone to Parliament with a proposal to legalize Islamic banking. We have been studying carefully the benefits of this banking system. We believe that that this banking system will help to improve financial inclusion, and we hope that we can have the first Islamic banks very soon in the new year. Other than that, I don't think I can add much really, because we are just studying the system.
Thank you, Manuel. Dr. Gondwe.
Yes. I think Islamic banking is a reality globally. It's not something that one can just push aside. In my previous job, I participated in setting up the first Islamic bank in Kenya, together with investors from Dubai and other parts of the Middle East. That bank is now doing well. But for me, as I returned home to be a regulator, it was also a lesson that before perhaps we set up an Islamic bank, we also need to ensure that we are ready so that the Islamic banking is stable and strong. An Islamic bank is not without its own challenges. And in fact, it learns from the conventional banking in terms of trying to avoid some of the mistakes that perhaps would erode confidence. About a month or so ago, I was a guest of Governor Zeti in Malaysia at the Global Islamic Summit. And the idea was, again, to deepen our learning so that we, by the time we do start the products in Zambia, we are strong. Now, to cut the story short, what we believe will start is to get the current banks that are already operational to open Islamic Sharia compliant windows. And from there, because most of these banks are the global banks like Mr. Nison's bank are already doing it in their other markets. I know as a fact, I think they have opened Islamic bank windows in Kenya, so they could bring that experience, and we as regulators can also work with them. And that then will culminate in the setting up of Islamic banks from the scratch. And so that's the process that we are looking at.
Sorry. Thank you very much, Dr. Gondwe. I think on the second question, I would want each of the panel members to comment on that. And that is on the question of consolidation of the banking sector in Africa. Looking at 5-10 years horizon, what do we think, or do you think would be the features and what will happen? I will start with Mr. Bob Diamond on this. On his
Thank you, Albert. But I want to say I want to hear from you with the recent investment in Ecobank from the Qatar National Bank on the issue of Islamic banking as well. So you're not going to get off the hook here. Actually, I think it was an interesting question about consolidation, Basel III. Where are we in this? I think if I can take a kind of a very high-level answer to that, I think the current environment for the big banks in the U.S., in the U.K., in Europe is very challenging. I don't think it's just about regulation or Basel III. I think it's political in many ways. I think there's an unwillingness of the leaders in those countries to come to grips with too big to fail, too complex to manage. So there will be limitations on the big banks' ability to grow, combined with a real call for capital and return on equity in their core businesses. And so I think it changes the landscape dramatically in terms of consolidation. And for the last 20 or 30 years, consolidation in financial services meant big banks buying non-big banks. And I don't think that's going to be the case right now. So I think Qatar National Bank investing in Ecobank is very interesting. I don't think we would have seen something like that a few years ago. And I think there is an opportunity for a very different kind of consolidation to happen in cross-border banking, which is not dominated by the big banks in the U.S. and the big banks in the U.K. and Europe. And I think that is a phenomenal window and a phenomenal opportunity. It's the genesis of the creation of Atlas Merchant Capital and then what we're doing in Atlas Mara. And so I think for the regulators, for the two governors, I think there is a real opportunity to take a balanced view and learn real good lessons from the last 4 or 5 years, and importantly, the next 4 or 5 years about how Basel III and regulation plays out in those economies. And in the meantime, I think it creates opportunities that wouldn't have been here before. In terms of Harry's question on technology, I think that's in information, I guess, is really what you said. We're looking at technology, specifically Rapture technology, to implement in some of our activities. And I think, talking with Doug Manazzi, the CEO of Bank ABC, and other people in the banks where we're hoping to close in the next period of time, there is a lack of an intelligent layer of technology which isn't very complex in the age of cloud, in the age of big data, that can improve the quality of information. And when we have cross-border banking, we're going to have cross-border risks. We will have industrial companies also and corporate clients operating in 4 or 5 jurisdictions. We have it today. And as a banker, we need to know what is our currency risk associated with that to the second. And we need to know when someone says XYZ company wants to do a loan in Tanzania, we need to know very quickly how much credit exposure do we have for them across Africa and across the world, because this consolidation is happening with our clients as well. So the thing we talk about internally, and it's really driving our technology plan, our internal technology plan, is increasingly in banking in Africa, speed is a virtue. And the person who has, or the bank that has the most accurate information the most quickly is going to have a huge competitive advantage in doing business with their customers and clients. Lastly, Governor, I just want to say I'm a competitive guy. I'm the only banker on this panel without a bank in Uganda. I have a partner who's a fourth-generation Ugandan and his family lives on a top of a hill in Kampala. We'll be visiting you very soon.
Well, I think AI should take cue from Bob Diamond and charge him for this advertisement. On that note, very unfortunately, I've been hinted that we've hit the wall with time. It always happens that way. I think I should tell the organizers that the next time I chair, they should be more gracious with time. Okay? So I would have to, unfortunately, bring this very interesting discussion to a close. But since we are all around, let's continue to engage. Cross-border banking has come to stay. It's a very useful mechanism. It is good to spread expertise. It's good to make sure that capital flows, skill flows, innovation. However, we should think of the downside and make sure that we also have strong institutions and regulators to make sure that we stay the straight and narrow way. And on that note, I would want to thank all of you. Thanks to the panel, to Governor Charles, to Bob, to Chris, and to Dr. Gondwe. Thank you very much. It's very refreshing to have my regulators and my competitors and collaborators with me here. Thank you, and have a nice day.
Doing business in Africa, you can't afford to be without Africa Investor.